The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials up 81. Nasdaq is down 30. S&P's off 14. Gold contract down $6.20, trading at $12.61 an ounce. You have silver down 13 cents. $14.73 an ounce. Light sweet crude still can't handle price, folks. Down a half a buck, trading $45.43 a barrel. Notes and bonds. You get the 10-year note flat, 121.02. 30-year up 8 ticks, 147.02. The 30-year, folks, bottom line, confirmed ABC structure on the way up. Took out its B point yesterday with volume at its highs. So you're talking about a 147 on the 30-year, which is pretty intense. King dollar up 447 ticks, 96.175. Now with King dollar done, King dollar got below its August 15th swing high yesterday. Had volume on the move, so they have conviction on the way down. You're bouncing above it today. Light volume again. Bottom line, that August 15th time frame is what the bulls and bears are fighting over that in a huge way. The euro is at 114 to 1 U.S. dollar. The yen is out here at 111 to 1 U.S. dollar.
How about that NASDAQ 100, man?
Yeah, let's
Down
look.
92 points.
Let's look
quite
at
an acceleration. They were chatting about the den, of course. That gave me the first heads up. And, man, quite a rocket ship to the downside right off that opening, really 10 minutes before the opening bell, about 9:20, 9:25. They got a little jump on the trading day.
So the NASDAQ, we just went down 108 points, folks, from highs to lows at 9:20.
Yeah, where we're at 63.38, and we're now more than 100 below that. Pretty crazy.
And we want to keep in mind, bottom line is that the NDX 100, the S&Ps, they're both in a confirmed ABC structure on the way down. So that's your larger picture. You know, bottom line is that they blew away. If we put this up, I'll put this up on the cues just so you can see how this shakes out. They blew away their B point with volume. There she is. Okay. So what you're going to see here is that your B point here was 156.17, 74 million shares. We took it out on Tuesday. Wednesday with 81 million. The price projection and this gets you down to the 149, I believe it's 149.50, which is going to get you below that February 9th low. Okay. So that's your larger picture. And what you're going to see here also, we can see this on the weekly. On the weekly, it's a monster ABC down too. Okay. And this is a vacation week.
So it sure is.
You know, bottom line is that there's no vacations this year.
Yeah, we got a half day of trading on Monday, so it'll be interesting to see in terms of everyone pretty much getting positioned today, right? Yeah. Yeah. Oh, and, you know, as you just said, there's quad witching today, as well as a rebalancing that's happening. And I believe, you know, I know it's saying that the S&P's rebalancing. I know Dave's been talking about the NASDAQ is going to have a monster type of rebalancing that we haven't had in 9 years. It's probably all of them, right? Maybe the article is just highlighting the S&P as the index.
Oh, there it is. Okay, so since 1990, the S&P has swung 1% during the witching week, almost twice the average of all the other periods compiled by BMO Capital Markets. Yeah, you're going to get some good volatility out here.
And to both sides, the bright side is that maybe with some of that volume, adding a little bit of liquidity on what may be a tight, light day, right, for holiday trading. But man, just so many different variables.
Well, you know what's interesting? So watch that quote right there, folks. This is where what you want to do as you're looking at the market and really getting to start to understand the market. Let me show you something for a second. People are talking about there's no liquidity. There's plenty of liquidity. The problem is that the liquidity is on the way down. The way that, you see those volumes? That's monster liquidity. The way that, it's really interesting as how, like, in the marketplace, volatile kind of means that you're going lower. And what happens with the liquidity, what happens is that liquidity in general is that you can get in and out of equities. Well, you can. The bottom line is that you're just getting out at a lower price. So it's there, but people won't don't want to pay. So liquidity just means that, can you sell it? Well, yeah, you can sell it, but you're selling it at a cheaper price because you can see the volumes are exploding.
Wouldn't that always be the case, though?
That's my point. And people are saying that there's no liquidity.
But by that definition, there can never be no liquidity. Okay.
No, there can be liquidity. Look, with no liquidity, you have very light volume. Because what ends up happening...
You can always find a price to sell, though.
My point is, liquidity means things go fast. When there is light volume, what happens is that there's less buyers, there's less sellers, and the bottom line is that there's plenty of liquidity. It's just on the way down, you know. So what tends to happen in markets that go down, folks, you're going to hear a million different analysts use different terms. It's like this morning on Bloomberg, they're asking about emerging markets again. Guys out there saying, yeah, well, you know, we think China is the best play. And yeah, well, guess what? China's down 35%. You know, bottom line, just pay attention to what you have out here, you know, because you look at Shanghai, is that 37? Yeah, the Shenzhen is down 37%.
Yeah, Shanghai is 29.
And 29, you know. So bottom line is that markets, you know, we got lower prices coming at us. The 30-year bond is going to get intriguing because what you have here is this, is that you have the aspect that the Fed is, you know, bottom line saying they're going to go up 2 more times. Well, the market is talking, and the market, bottom line, is saying, hey, guess what? You know, we're buying bonds, hand over fist. This is an ABC up to 147 or 144. So it doesn't look to me that as we come back from 10-year yield is 2.79. So I suspect what happens is that when we come back, even at the beginning of the year, you know, there's going to be a few problems in paradise out here. Nike came out with numbers last night. They caught a bid out here this morning.
Sure did.
That's up 580, and you know, so that's down from 86. That's in pretty good shape compared to the market.
Yeah.
You know.
Yeah. They really delivered on those numbers, right?
Yeah.
Can we go pull up their numbers? I'm curious.
Yeah. Let's see.
There we go. Yeah, so they came in 46, kind of towards the lower end, and they had 40 to 54. Big number though, 9.37 billion.
Yep.
Extra $200 million versus their 9.17. Let's see, gross margins barely beat that, 43.8. Quite a number, man, on a margin level,
huge,
right? I mean, it makes sense. If you're selling sneakers at $150, $200, I don't think they're costing $100 to make, right?
No, not even close.
North American revenue, they beat as well, 3.78 versus 3.7.
Yeah.
They beat kind of across the board, right? Every number higher. Greater China revenue, I bet the market likes to see that.
Oh, yeah.
Because you're talking about an area for growth. 1.54 versus 1.43 on a percentage basis, huge beat there. And pretty much in line with Latin America, et cetera, et cetera. Yeah.
Now let's go to CTAS because they come out with numbers too. Now this is going to be encouraging, you know, for the market in general. So this company, folks, you know, I'm Mr. Basil Chapman. He talks about this a lot and has for years. Okay, and he's absolutely right. So when we get back, we'll talk about this because this company here gets a real flow about not just retail, like all businesses, because they deliver to so many businesses.
Uniforms.
Yes.
Yeah.
Stay right there, folks. Tommy and I are coming right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome to Option Expiration, folks.
We're gonna have to restart the program. What just happened, man?
You're gonna love it.
The Dow's up 350.
You got the look at that in the Nasdaq. We brought the Nasdaq up, so the NDX is only down 9 points now. It was just down 90. You got the S&P's up 16, Dow Industrial's up 360, Nasdaq Composite up 51.
And I just want to, can I jump over to get a feel for it? Look at this. So there's your jump, man. Look at this. That's the Dow. There's your NASDAQ, right back up there, and there's the S&P 500, and we'll pull it. I saw some news coming over there talking about the Fed, but it wasn't talking about Powell. It was talking about, Fed's Williams. There it is. So it's going to jump around, but it was that article. So Dow jumps 350 points after Fed's Williams says central bank could reassess view in 2019. Well, I mean, okay. Right?
Yeah. Oh, listen, this is why you gotta love markets, man.
Yeah.
And particularly what ends up happening, folks, is that markets that go lower, okay, have vicious counter-trend bounce. You know, that's how they move, which is just, there's no doubt it's amazing. You know, let's pull this back so you can take a look at this. So you can see that, you know, bottom line was at 2470.
Okay, so he's being interviewed on CNBC right now, Williams. That's what's going on. Okay,
perfect. Yeah. So bottom line, folks, is that, and bear markets, what do? You don't buy the dip, you sell the rip. So we'll watch how this whole thing shakes out. If you were out here, so watch this. You take the S&P, take the SPY here. So you're coming into the highs of yesterday, which was 249.47, right? The number that you really want to watch here is going to be right where we are. 249.35. If that baby can't hold that, you see that number?
Okay.
That's 3 o'clock in the afternoon, 17 million shares, and this buy here only did 8.
And that's the low of Wednesday.
That's right. And then what I would do is this. Then I take this and you say, okay, we have fast fingers in these fast markets, but then I take the fib number and say, okay, what did you do? Well, big deal. You didn't even do a 0.382 retracement yet. Doesn't mean a thing. You know, but that's what you have. I mean, because when you look at it percentage-wise, it's very quick. You know, so we'll see where this shakes out. But you gotta love these markets, man. I mean, it's a big number. There's no doubt about that.
Can we jump to Apple? Because they just jumped dramatically. They were down about $1, I think, and they're up 67 cents. I mean, everything probably just jumped for that type of a move in the market.
Right, and this is where, and it's.
But there you go. It just jumped right from one. Let's see this bar right here. So we were just at a low of 155.53.
Yep.
We were 155.85. We're now trading at 157.40. I mean, you're talking about $1.50 in a heartbeat.
Right, and so watch what happens here is that, and this is where you want to wrap your head around the ETF structure, understanding how that works. Because as soon as participants come in the futures market, which they did, right? They bought the NDX 100, they bought the S&Ps. Well, what ends up happening is that the sponsor of the QQQ, as well as the SPY, immediately has to get in and buy those stocks. And they're computerized, folks. It's not like me and Tommy would be sitting there saying, oh, we're going to buy those stocks now. Immediately, what ends up happening in order to keep the net asset value of the S&P, of the SPY, and as the QQQ, that's how that works. So that's why it's always, is it the egg or the chicken? Do you know what I'm saying?
Yeah.
Simultaneously,
yeah.
As that happens. If we go over and we take a look at, let's see, so another MSFT, you know, Microsoft would be, so what happens on some of these, like Microsoft and Apple is in the NDX 100 as well as the S&P. So that's where you see a really good juicing. Do you know what I mean? Look at Microsoft. Microsoft went from 99.98 to 102.
Crazy.
And that's, you know, that's the computers, the computers are doing it because of the aspect of the net asset values.
Yeah, balancing it, keeping
balancing it, and that's the only way they could do that quick. So
yeah,
you can expect more volatility all day long out here. That's the real bottom line. The dollar, what's going to get interesting here is the dollar again, because it got below the August 15th level, had 31,000 contracts, which is big contract volume. And thus far today, we've done 9,600, so we'll probably do about 15,000. The real question is it going to hold volume? Is it going to hold price? You know?
Yeah.
So that August 15th deal is a big number, and you know we'll see whether it can actually hold it. We had a question: is what is good price to sell the SPXL? So SPXL. So this is okay. So this is the direction 300% exchange traded fund leverage product. So this is interesting. Okay, so what the Tiger is asking here, there's two different ways to trade these, right? So, and what does happen is that when you can sell this instead of buying it also, and that's what the question is that what is the price point to sell if he's going to do it intraday? And if you're going to do it intraday, bottom line is I'd let it just test that high again one more time, 33, 36, because you're going to see. When I'm doing this, I would still, when you're trading these leverage products, what you want to do is go to what they're trading off of. That's kind of how I always look at this, and that is the number right there. It's 249.35, which.
Okay. About 35 cents from, yeah.
Yeah, and you know what do we hit? We hit the 249.71, and what you're going to see here is that, well, let's see, what do we got?
It's 10:24.
10:24. So you get 6 minutes left. You know, most of the time, folks, is that when you get a pop like this, though, you're going to get another test of it. But right now, that's all that is a dead cat bounce. You know, because what we would have saw two different things. It doesn't mean you won't get it, but you'd get more volume than 8.8 million because you're going into 17, you know, so. And what I do like is that because of just what that news is, and because, you know, okay, well, they can reassess. Well, my take is that, yeah, they're going to reassess, man.
Yeah, that should have been known, right?
Yeah, exactly. Yeah. Because the bond market, what has happened is this, which is pretty cool. The bond market, which is the largest in the world, not just bigger than all the equity markets, is already talked. You know, the bond market just keeps going higher, and rates keep going lower. So it's like, okay,
yeah.
You know, the Fed can come out and say as many things as they want to say, but the reality is that the bond market is nervous for some reason, you know, and I suspect they want to just make sure people get their money back. You know what I mean? We are now at the bottom. Okay, so he's saying, Fed, we are now at the bottom range of estimates of a neutral rate. Okay, so watch what happens. Now the market's going to take a conniption, folks, because what everyone's been speculating on is that Powell said that we're at a neutral rate of the range. No one really knows what the range is.
Sure.
You know, what is the range, okay? You know, so
yeah.
Gonna be a wild one. Never mind that we're gonna have the government shut down, you know?
We can get some headlines, man.
Oh, listen, man.
Secretary of Defense stepping down. He's back at work this morning. We may get some more action there.
Right.
We'll see.
Right. Well, the bottom line is that it looks to me like, hey, it's gonna be a shutdown, you know? Merry Christmas. Dow Industrial's up 300, Nasdaq up 33, S&P's up 10. We have gold down 6, silver's off 11 cents. King dollar up 5.67. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has launched our best sale of the year. The Tiger Dollar end-of-year sale runs through December 31st only. And right now, you can get up to a 40% bonus on whatever you spend on Tiger Dollars. We've doubled the normal bonuses that come with Tiger Dollar purchases. And the best part is, whether you're a new subscriber or you're already subscribed to any TFNN product or service, Tiger Dollars never expire and can be used for any TFNN newsletter or service. We've redesigned the new TFNN website to make using Tiger Dollars as easy as possible. Once you apply them to your account, they'll be used for all recurring transactions going forward automatically, so you have nothing to worry about. For you current subscribers out there, this is a no-brainer. Go get your Tiger Dollars now and lock in added savings on all your subscriptions. Remember, this sale ends December 31st, so get your Tiger Dollars right now before this deal passes you by. And Happy New Year from all of us at TFNN. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 291. You get the Nasdaq up 36. S&Ps are up 10. And let's go over to the NQs, because the NQs, this is like just absolutely wild. So, and the futures on the NQs, folks, it's 20 bucks a point. And you're going to see, when we started the program off, you had the NQs at, well, no, and we started when you did the update.
Just before, well, that's the 920, so that's just before the market opened.
So 63.38.
Yes.
You go down to 62.25. You bounce back up to 63.31. And then we're at 62.97 now. It's intense, man.
Can you go to the description? What's the margins that they're putting up with that?
I think it's like 6,500.
Yeah,
7,700.
Okay.
Yeah, it's $20 a point.
So that would take 400 points almost to liquidate your position.
Yeah.
Which we'll all be in trouble if that comes to fruition today.
Yeah. No doubt.
Yeah.
No
It's
doubt.
just interesting though, because on some of those, right, we look at natural gas all the time. Versus the margin does have daily views moves potentially right now.
It's strange.
Yeah.
It really is strange, the aspect of how some of these come out. Here, I'll show you. I used to trade sugar a lot. And where's sugar? Sugar was like, I think sugar was $1,000. Like it was, there it is. It's $1,000. And now sugar doesn't move a lot, but it really does in the aspect. That's 16 cents, okay. And bottom line, 1 point, is 1,100. So that's $160. Well, that's not that much, I guess, but it's intriguing in general. Do you know what I mean?
Yeah, definitely.
Let's go to our man Mark in Bedford. Hey, Mark, what's going on, brother?
Not much. I call for two reasons. First and foremost, wish you and Tommy a happy Christmas.
And you also, man.
You too, man. Merry Christmas. Happy holidays.
Let's make it a great new year. 2019, folks.
Coming at you. Watch out.
Oh, baby. That's a trip, man.
You better be ready. It's here, baby.
Yeah. Tom, you had a very interesting call on yesterday afternoon show in the first segment. A guy, I think from Michigan.
Yes.
He was talking about some
kind of signal, yes.
Yeah, from some statistic, and he looked at a 20-year chart, and I was just blown away by that. I had to go back and listen to yesterday afternoon show. He basically fell in line with what you were thinking, but one of the things that I took away from that is he said that when he looked at the chart that there would be a very good bounce. Now, here's a two-point question. Do you think you agree that we'll have a pretty good bounce out of this? And
when are you saying the bounce?
This is the beginning of the bounce.
No, my take is that we're going to be red by the end of the day. But yeah, I don't. We're in an ABC structure down right now on all the indices, so I don't. Just when I brought up that aspect of how we just got that beautiful bounce just then, the Bulls and Bears are going to be fighting like crazy all day long, but the Bears have been winning lately, and I don't think that's going to change, as we come into the end of the year. The bounce, so what I did get, which is going to be really interesting, I don't understand, like, the signal that he was talking about. That's why I asked him what it is again, and I don't know what that is. I don't know, what exactly that, whatever that pattern is he was talking about. I don't know that pattern. That's just me not knowing it, okay? What is cool is that it looks to me like what we're lining up, though, and this is where I think that we will get a bounce, but that's going to be after we get another vicious month from the way down, because if that's what it is, this is going to be 3 monster black crows, because he was talking about candlestick charting, okay? So if we get another bad month, what happens is that'll be 3 black crows, and what happens on 3 black crows inside candlestick charting, they love to get retested, which is a mind blower, because that would be saying that, okay, the Dow can be down somewhere at 21,000 next month, right? And then all of a sudden you get a counter trend bounce to go all the way back up to 26,000. And I can see that definitely happening. I definitely can. Because, watch, I'll show you. If you go back to the 2008, and that's what he's talking about, he brought that up, what you're going to see is this 2008 here?
No.
2008.
There you go. Yep.
Okay. What you're going to see is that,
that's 7, basically, is that what you're looking at?
Yeah, it's 2007. Yeah. You're going to see that, we came down hard. I just got the S&P up there. We came to 1576. We got down to 1270. So that's 300 points, right?
Yep.
And then we did a counter trend bounce, and we got all the way back up to 1440 before it really fell apart.
Yeah.
That's what normally happens in bear markets. The counter trend bounces are vicious. And then they go back down again. You know, you've heard me say many times the market's job is to take the most amount of money away from the most amount of people in the least amount of time, and that's kind of how the market does it. They'll grab both sides of the deal. So.
Well, I tell you what I'm afraid of is I'm afraid of what will happen if this is going to be a prolonged government shutdown case between Congress and the White House, because you have the new members of Congress, the Democrats coming in, and they're not going to yield on this wall thing, and neither is the president. And it seems like my take is that the president was willing to give in on this, and then he probably got talked to by someone on the in his base and said, "Oh, no, you promised us the wall," and that's when he came back in and said, "Oh, okay, we'll hold the line on the wall issue." But I'm afraid that January could be quite bloody, and this could be the start of the bloodbath. And I'm not talking about Wall Street; I'm talking about in Washington.
Well, you have the reason it didn't get signed is that you had the revolts. You know, Ryan can't control the House, so he had the revolts on the right, and they said no, we're not doing it. You know, and so.
Well, they did have a stop. They had a spending though. They had a short term, and Trump was the one that wouldn't sign it.
Well, he wouldn't sign it because what happened is that the parts of the inside that house, they had their little revolt happening. Anyway,
the House, just so you get it straight though, the House was going to pass that. And
my understanding is the House was going to pass it before they had the revolt that night, and that's why Ryan had to go to the White House.
Okay, but okay. That's
so
not,
anyway,
okay, it's important to get it straight. The House was going to pass it, and Trump said, "I'm not going to sign it." And so then, why would the House put their votes on something to get a record that was meaningless? So that's why they didn't do it. So the House was going to pass it.
Okay.
Trump said, and that's when Ryan walked out to the cameras and specifically said, "Trump's not going to sign it." So we have to go back to the drawing board. But anything that the House passed that Trump would sign wouldn't pass even in a Republican Senate. So that's where it all came to a screeching halt. Yeah.
So that's the political part of the issue. The market is basically in a correction, you know, and chaos.
And then you take into that how is the market going to interpret everything in Washington? And so you're talking.
Well, it's easy. It's chaos. That's easy, man. That's a no-brainer.
You see the worry. You see the worry. Yeah.
Hey, Merry Christmas, guys.
You too, Mark.
You know what's going to be cool? We got our man Alan from Michigan coming right up, and he's going to be talking about that super trend. So he's going to explain that to us. So make sure.
Oh, great. Okay.
Perfect. Stay right there, folks. We're going to be coming back with Alan from Michigan. We're going to get this thing done.
Here we go.
Dow up 238. S&P's up 24. Come right back. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up at 212. Nasdaq is up 14. S&Ps are up 3.5. And I hope everyone out here has rode a horse before, because you got a bucking bronco out here.
Quite a market, man.
And if we go take a look at these S&Ps for a second, bottom line is that what you're going to see is that when we had just popped up to 2508. And bottom line is that it just gave that up once again. And right now the S&Ps are up $2. Is that wild, man?
2 points, yeah.
I gotta love it. Let's go over to our man Alan from Michigan. Alan, what's going on, brother?
Tommy, I'm like a bad penny. Just keep showing up.
I love it, man. Well, you heard. You're gonna have to walk us through this again. I mean, it's the super trend subject, right?
Yeah.
That's what we're talking about, right?
Most of your charting packages offer this, and I do want to tell your previous caller that the trend, because it's a monthly candle, really doesn't count till the end of the month.
Yes.
What I said yesterday was that currently the SPY and the IWM, not the Dow,
okay,
not the Qs, SPY and the IWM are currently showing a bearish super trend signal, which has not happened since March of 2008.
Cool. Okay, I get it. Yeah.
Most charting packages, if you want me, I'll screenshot it and send it to you. Do you have an email?
Yeah, it's OB1 as in number one. OB1 at TFNN.com. And I'm sure
OB1.
OB1 at TFNN.com.
OB the number one there.
Yeah, and I'm sure I can find this on the Bloomberg somewhere. It must be on there. But send it to me. That'd be awesome, man. I appreciate that.
All right, you keep them straight up there, Tommy.
Love it.
Thanks, Alan.
Thanks, man.
Bye-bye.
Okay, have a great one. Have a safe one.
So we'll pull that up. Maybe we'll get it up at least by your afternoon show on that.
Those candles are vicious, man. There's no doubt.
They sure are, man.
Yeah.
They sure are.
And we'll see where it shakes out. There's not much in between this. Here. So we got to go back to Cintas, okay? So here, I'm going to give all you bulls, some ammunition here, right? Because to me, this is just a correction. I don't see this. The economy to me is still good. I mean, it's still all right. Do you know what I mean? So we'll see where this shakes out. But if we look at Cintas, okay, what you're going to see is that Cintas has been in a downtrend, no doubt. Okay, this is. Whoops, I don't do this.
And just as you do it, jump in again. So these are the companies that provide wardrobes, uniforms. So when you really talk about the huge multinational, I mean, this is a $16.8 billion company, and they're providing entrance mats, restroom supplies, promotional products, everything that would indicate whether the economy is flourishing.
Every store.
Exactly.
Right. No, so it's pretty cool. And then if we take this and we put this on, first I'm going to put it on a weekly. What you're going to see is that we're off the highs of 217. You know, but what I want you to see also is that, you know, this thing, let's put this bigger, because you're going to see the expansion of price of this was dramatic, too.
Yeah.
Okay, so, you know, we've gone, if you go back to 2010, it was $23.
Almost tenfold.
Yeah, you know, and that's a good number. Now,
tenfold, that's a good
seriously,
number, yeah.
So you came off the high with volume, right? And when you come off the high with volume, what it does is set up larger corrections. That's my take on it. Now, the cool thing is that you can see that we've broken that high volume low of 168, right? But look at the difference. We had 19 million. Well, we have 11 million, okay? So when I look at it, it's like, okay, now I want to bring it a little bit closer. So now let's bring it into 5 years and say, okay, talk to me. What are you doing? Well, when I look at it, it's like, okay, you know, is it 122? Is it 153 that's going to, you know, do something? So that's technically. Fundamentally, what you have here is you can see that they basically, you know, are doing pretty good.
Yeah.
You know, so it was a surprise to the marketplace yesterday.
Yeah.
Okay. That's something to consider in the aspect if you're really worrying about the whole economy, how the economy's going. It doesn't mean that that stock's not going to go lower, because technically it looks to me like it's going to go a bit lower.
Sure.
But fundamentally, I like what happened there. Do you know what I'm saying?
Yeah.
You know?
Yeah.
And I brought up yesterday, I think the way that this market is going to get saved, and I don't think it's going to get saved until lower price, but it's going to have to do with the dollar going lower. You know, if the dollar goes lower, you know, that's going to get some relief for the marketplace.
Yeah.
So there's a lot of moving parts out here right now, and you know, it's going to take a while to basically get through the destruction that has been generated on the way down. You know, the dollar is going to be a big deal. This S&P blows my mind. I guess the NASDAQ is the same thing. Look at that NASDAQ. So the NQs are down another 50, you know.
Yeah, the 100.
Yeah. So let's just take a look. So the strength inside the NDX 100, you get net T's up 4%, Broadcom's up 3.7, Texas Instruments up 2.8. On the way down, Facebook. Look at this, Facebook. Let's go look at Facebook.
Yeah, Facebook. I'm less of a fan every day with Facebook.
Yeah, but it's gonna 126.85. That's gonna break out its lows, man. Not today, but this thing is absolutely
talking about 50% haircut for supposedly, you know, a revolutionary company that was leading the world.
Right. And so,
I mean, the negative sentiment is going to be so, and I know you're talking technically, I'm just bringing it fundamentally in my own personal, and I know you share it. You closed your Facebook.
Right.
The negative sentiment this company has, now this is just in the U.S., maybe they can change things if they're over in India, right?
Yep.
There was the report they're going to come out with their own cryptocurrency. Did you hear this?
No.
So they're really trying to come out with their own cryptocurrency to provide assistance with countries, especially like India, and they're going to be able to process it through.
Oh, they're going to help everyone, aren't they?
We'll stay there. Yeah, right. They're going to process it through WhatsApp.
Yep.
Okay, so they're going to use it, and it's going to be something where you can, and it's going to be blockchain, but it's going to be, not to use the word that tethered to a dollar, right? So it's going to have a hard exchange, and they're going to try and allow those types of transactions on an easier basis in India. So yeah, maybe, you know, everyone doesn't hate Facebook in India just yet, but my personal experience is that their negative sentiment is just going to take years, if even possible, because I will never trust that company again.
Yeah.
And that's a real tough one to overcome when you talk about that they're in the business of using your information, and I will never trust them with my information ever again.
Right.
So
doesn't make
I still
any
have a
sense.
profile. I have it really because we have a Facebook page on TFNN. It's a little bit easier to be able to access. If I was not involved in that in any capacity, I would probably delete it myself.
Right.
Yeah.
Yeah, it's serious business, man.
It is.
You know, there's no doubt. The some of the higher volume equities out here. So let's take a look and see what we got. And we're going to get volume in this marketplace today because of quad witching and the rebalancing and all of the above. You get, let's see, Ford Motor, that's up 2 cents. There's not a lot of Not any big movers out there.
Facebook's the first one that jumps out, right?
Yeah,
129 down almost $5.
Right.
Cisco's down decently. That's up 1.5%, off 60 cents, only $43. Pfizer even up 80 cents, trading at 42, not bad. Nike, another big one we talked about last night. Yeah. JP Morgan up $1 at 97. ExxonMobil up $1 at 70.
You know what we haven't talked about?
Go for it.
Budweiser.
InBev. InBev in bed with Tilray.
Tilray. You're going to be drinking. You're going to be drinking infused pot, folks.
What's in it? We should talk about it on the way back, but this is just a partnership. So InBev didn't even need to give Tilray any money. They both just put some money in the partnership versus all these companies giving billions to be a player.
Yeah. Stay right there, folks. Tommy and I come right back.
They each put up $100 million or something.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You have the Dow up 162. Nasdaq is down 8. S&Ps are down 5. Yeah, you heard that right,
Quite
folks.
a reversal, man.
Bottom line, sell the rip.
Where the day leads.
Sell the rip.
Speaking of selling, we are selling some Tiger dollars, man.
Yes.
Up through December 31st. So we got the special going on. You can get up to a 40% bonus. As we talked about, we really worked on the new TFNN website, making it so easy. You apply them to your account.
Right.
They'll get used automatically, all future transactions, so your card is not charged until those Tiger dollars are completely to zero. If you're a current subscriber in there, so easy. If you're unfamiliar with the system, give the office a call. Allison, myself, will walk you through the system. Takes a minute or two. You're all set, and you can get whether it's a 20, 30, 40% bonus for the different price levels in there. And Tiger dollars never expire. Can be used for any newsletter, any workshop, anything in the future. Whether you're a current subscriber, new subscriber, check it out. End of year sale. We do a few of these a year, and it's always a good one, man.
And you want to be able to hold on for the ride out here in the market,
What ride? What ride?
Because it's going to be quite a ride all day long.
63.40. Down to 62.26,
right.
Up to 63.28. We're now, I mean, S&Ps, we're a full percent off of where we just spiked to, 25.06. You're talking about almost 26 S&P points from that high. And, you know, crude oil jumping around back above 46, gold 12.62, and then currencies jumping around as well, man.
Yeah. And as you get closer to the end of the day, you're going to get actually more volatility. If we just go over to that S&P again.
Is that even possible? What's going to happen, man?
It is, I'll tell you.
We had the VIX spiking over 30 yesterday, right? We haven't seen that number since February. Go ahead.
If we grab this back into the two-day, oh, don't do this to me. There we go. What you're going to see is that you just, nope, that's not the way to do it. All right. Anyway, bottom line, you get the gist of it. The gist of it, folks, is that we have ABC structures down on all the indices. Stay right there. We got Fast Market coming up next. And, of course, we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon.
Thanks, man.
Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.